But what about the market texture? Let's discuss that a little bit further. We have with us Nooresh Merani joining in on the show right now. Jonathan Schiessl, of course, joins in on the fundamentals of the market. And we also have with us Kush Bohra to outline the technicals. But Nooresh, hi, afternoon. If I could just start off the discussion with you first. Quiet consolidation, but yes, the band continues to grind a little bit lower. Where do you see the next support for the index?
So the same supports 19,300, 350 remains a major support. 19,650, 700 remains the stiff resistance. But the only thing which comes up on our list today is the fact that Reliance Industries is showing momentum. The last 5-7 days highs is about to be crossed. 2,600 is a major level for it. If it can sustain 2,600, that would be a big breakout. It would be an all-time high adjusted for the geo-financial. So Reliance Industries is the one which can change the direction of the market in terms of, given that we are in such a tight range of 400 points. So we'll be watching out for Reliance Industries if it can follow up beyond 2,600, 2,620 levels. So looks very promising. Overall, the range would continue. Only when we get about 19,650, it becomes a momentum trade.
Individual stock or sector trend that you're picking up? Kush?
Hey, hi, I didn't realize that question was for me. Well, very stock specific, I see a lot of action happening across the, mid cap and small cap names. And, then there are pockets. On the whole, I agree with Nooresh, there is a bit of caution that is advised, on the indices. Hence, I wouldn't be taking too much, or rather a heavy position home. So I'd keep my positions light as far as, the sectors go. I think the power sector seems to be doing well. And on the short side, if anyone's looking for a trade in a cautious market, I think FMCG is a space where, you could be a little watchful. Britannia, HUL, both of them have actually been, under a lot of pressure and continue to remain so without any kind of, stoppage. So FMCG is a sector that I'd probably keep my radar and keep on my radar for short positions. And power sector is one that I'd have from a long perspective.
Hi, afternoon. What is it that you've made of the recent correction that played out in the Indian markets since last 10 odd days? Pretty much aligned with the global markets, though.
Yeah, it's been an interesting, I think, few days after obviously a pretty strong period. India clearly has come under a bit of pressure, as you say, as we've seen elsewhere. I think a lot of international investors do want to allocate more to the likes of India and emerging markets, but the continued weakness out of China and the lack of policy action is probably holding them back. And clearly, the most important point remains: when and at what level will US rates peak out, and that obviously has implications on the dollar. So we're still in sort of no man's land, and obviously from a sort of northern hemisphere perspective, seasonality is pretty bad as well. Over August, so probably this correction probably carries on for a little bit longer.
Correction might carry on for a little longer. Jonathan, hi, this is Anisha also joining in the conversation. The big debate these days seems to be when it comes to the financial space. It used to be a consensus buy, but things seem to have turned a bit. Of course, yesterday it was a bit of a knee-jerk reaction with the RBI decision on ICRR. But incrementally speaking, naysayers and analysts are calling out that there is lack of fresh triggers, and if at all, the risks are more skewed on the downside.
Yeah, Indian financials, we've sort of continued to play that space, but primarily in the private banking sector. It's from an outside investor, Indian financials are a very good way of playing the broader Indian story, if you like, because obviously, banks have their fingers in pretty much every part of the economy. There'll be short-term ups and downs, but I think Indian financials still remain a vital sector and a good way of playing the Indian story as such.
Fair enough. That's the word coming in as far as India's story is concerned and how financials are stacking up. What else is happening in the market today? Well, IT is holding up okay, and that's all thanks to HCL Tech. That mega deal that they signed with Verizon is something which is working well, 4% higher on that one. So what's your view, Jonathan, on IT? Do you think it's bottomed out, or there's another quarter of poison which is left?
Yeah, so we've been saying for a while we've remained decently positioned in the IT sector. Again, I think the long-term story is a good one. Obviously, this whole AI story, there's another sort of leg to this whole area. And so, yeah, look, short term, I think it probably has bottomed out. Rupee remains sort of relatively well anchored, hasn't really weakened off. So, but I think obviously with these new deal wins coming through that we're hearing about, I think the sector still remains pretty good.
Any value in IT, and does it seem like any of these stocks, including HCL Technologies, which is jumping up on the back of that $2 billion deal with Verizon, do you sense any of these names could be bought now or at least nibbled into?
So technically, the case is we have very divergent moves happening across the IT space. So HCL Tech, on the other hand, has been relatively a strong recovery compared to what happened with the large cap IT space. So if you look at the all-time highs for HCL Tech, it was 1350. It went all the way down to 900 in September of last year, which is where most of the IT names bottomed. And now we are at almost 1150 to 1200. So looks the most promising one in the large cap IT space. The second one is Tech Mahindra, which looks interesting purely for the fact that after the numbers, the stock corrected all the way to 1100 and has made a slow and steady recovery over the last 10 sessions to 1250 levels. So these are the two names which look very promising in the larger IT pack. In the mid cap IT, I would still wait. There have been short-term momentum breakouts in some of them, but some of them have already gone way beyond 52-week highs also. So I would focus on HCL Tech and Tech Mahindra on all dips.
That's the take coming in as far as IT stocks and HCL Tech is concerned. But Kush, I wanted your take regarding a couple of these big buzzers. Kalyan Jewellers is moving on heavy volume, sitting at record high level with a gain of around 10%. And on the other hand, you had Apollo Tyres. The numbers weren't that bad, but the stock is seeing a cut of 7% again on heavy volumes.
I'll start with Kalyan Jewellers. Again, this stock, if you see, has actually given a breakout today after a fair bit of consolidation. For about a month or so, it's been consolidating. The bias turned positive recently, and it's just moved out. And not to forget that this is after a very sharp run from about 110 odd levels that we've seen not too far back, but just in June rather. So the moves there, it's actually up on very strong volumes. I don't see a reason for this move to stop anywhere before 225 and 240 kind of levels. So I'd suggest if anyone's got any positions, don't be in a hurry to exit because the stock's actually moved up quite a lot. 200, these numbers typically kind of remain a level where you'd want to book profits. But the sentiment aside, there isn't anything on the charts that is suggesting that you should exit them right now. Yep, mild profit booking, but that's a Friday effect as well. So all in all, hold on to this one. 190 would be a trailing stop loss if you already have an existing position. As far as Apollo Tyres goes, well, yes, this is a sudden breakout, and today the stocks crossed below its short-term averages, 20-day and 50-day both, on the back of strong volumes, and it's coming very close to its support zone of 395. So as long as that is maintained, I'm not saying there isn't a cause of worry, but the stock should probably halt its fall somewhere around those levels. So as far as 395 is maintained, I wouldn't read too much into this dive. I'd probably look for buying opportunities, but I'll give it a day or two just to see if it holds 395 kind of levels.
The take coming in on Apollo Tyres right now, sinking quite a bit, down about 7% as we speak right now. Couple of other names. Look at what the entire PSU pack has been doing, and Hindustan Copper is actually, roaring right now. It's a 6% move, no less, that you're seeing on this one. REC being the other one, which is also seeing a decent move. Of course, there is that additional trigger, that of the MSCI Global Index rejig as well, and an inclusion for REC that seems to be aiding this one. And then, of course, there's Motherson Sumi as well, reacting to its positive numbers and the management commentary thereof. A solid 3.5% move on that stock. Look at India Cement as well, the charts, and especially the last 2 days, the kind of solid moves that you've seen on India Cements. It's now climbed up above that 255 level on futures. It's a solid 6% move that you're seeing on India Cements right now. 6.5 nearly in the cash markets. That's India Cements in trade for you right now. Nooresh, let's read the charts here because quite a bit of buoyancy actually on India Cements.
So after the deal of Sanghi Industries, we've seen a breakout move across all the cement names, whether it is India Cements or whether it is Kesoram Industries or Orient Cements. So we are seeing that momentum play out across the board. India Cements has been a case wherein the stock keeps going into derivative ban also. The stock gave a breakout 2 days back about 230 levels. And now the next level to watch ideally for the stock would be closer to 260 255 is the next level, which was the recent highs, almost the 6-month highs, and the next one is 295 to 300. Overall, the trend is positive. The only problem is tomorrow again it goes into a derivative ban, so could see some bit of a fade off. So positioning could be difficult, but on dips to 245 to 250 would be a buy. Stop loss below 235, and slowly and steadily could go towards the 280, 300 mark here.
On that note, let's do one thing. Let's take a breather on the show. When we come back, we discuss more stocks as well as what's making the headlines. Welcome back. Well, for the markets, it hasn't changed much. We're just around the 19,450 mark. There was a bit of recovery. At one point of time, we thought that we're likely to head around 19,500. No, doesn't seem to be happening for now. In terms of stock-specific action, GMM Pfaudler continues to do quite well. It's high by 12%. Anand Rathi is doing okay, and then you have likes of Kirloskar Oil, etc., that are also doing its bit. Jonathan, wanted to get a sense from you that, manufacturing was the next sunrise sector per se for the Indian markets, but then within that as well, there are a lot of verticals, right from defense to electronics manufacturing, etc. Is this a space that excites you?
Yes, I think so. I'd agree with you. I mean, obviously, you've got to consider where we are in the underlying economic cycle for which part of the sector. You've got to look at the available listed stocks in each area. But clearly, also you've got, structural stories such as, obviously the geopolitical situation in the globe, and some manufacturing activity has certainly been moved into India, which presents opportunities for various different segments in the Indian listed space as well, and unlisted. So yes, an interesting space. There's a good variety of stocks available in India. And certainly one which traditionally we've tended to play as well.
Right, okay, that's the take coming in on some of those manufacturing names. The PSU basket, let's look at that also, because that as a pack has been doing very well. I mean, the traditional sort of color in which investor did look at PSUs, that doesn't seem to be quite the case, especially given the kind of returns that some of these stocks have seen in just the last year-to-date move, or even the last 3-month move, if you were to really stack that up. Especially the PSU banking names have done extremely well. If you see, in fact, the recovery that they've made, say, from the COVID lows, for instance, Hindustan Aeronautics has seen a staggering 571% move, BEL, BHEL, SAIL, Oil India, even an IRCTC, PFC, REC of course is a buzzer today as well. All of these names have held out very smartly indeed. And of course, like PSU banks, like an Indian bank, Bank of Maharashtra, IOB, Can Bank, the list has really broadened out of those traditional favorites, the likes of an SBI, which also has done well, has seen a 173% move from the COVID lows, but the rest of the gamut as well has participated. Today, of course, most of these stocks, in continuation with the ICRR announcement yesterday post policy or amidst policy, these stocks have been a little bit on the sidelines. Jonathan, just your take particularly on PSU banks as well, because, like we were discussing earlier, the underlying trend this time around seems to be that in Q1, or rather since Q1, the margins clearly have peaked out. Now, that could very well be a short-term phenomena.
Absolutely. I think, again, just talking at a very generalist level, the PSU sort of space, has traditionally traded at a valuation discount to private sector peers. And you tend to find when the market's done well that, after the private sector leaders have moved, then obviously the market attention shifts down to the more value-orientated PSU space. So that it's not unexpected that the PSUs have done well. And obviously you can pick up exposure in some PSUs that you struggle to find elsewhere as well. So, from our perspective, and I think we've said this many times, we just focus. We prefer the private sector, the private banks vis-a-vis the PSU peers. I can understand why some investors might choose to play the PSU space, but we tend to be very long-term investors, and we're very happy with the sort of compounding returns that a lot of the private sector banks have delivered investors over time, and therefore we haven't sort of switched into the PSU space.
Switch to PSUs yet, but Nooresh, I think Kush did point out his top bets within the power sector. Wanted yours as well, because JSW Energy, that has been doing quite well today as well. It's high by 3%. Yesterday it was up around 5%. Torrent Power, the numbers were quite good, but the stock is seeing, I think, a bit of a profit booking. What's your top recommendation from this entire basket?
So there are two ways to look at power. One is the PSU side, which is where we continue to like Power Grid, and on NHPC, the other one. These are the two names which look very promising, strong charts. Power Grid has seen a correction and a good entry point. NHPC is one which gave a big breakout and is around that 49.50 on mark. We could see another leg up. Same way, there are, say, Adani Power could be interesting going forward. That is a chart which comes up on the radar. Tata Power and JSW Energy remain the best bets in the private side of it, which is where we've seen a breakout in JSW Energy. Tata Power is yet to see a follow-up move beyond 245 levels. So Tata Power could be the next interesting bet. And even a smaller name like CESC has come up on the radar if it can sustain above 80. So all in all, a lot of power names are coming up on the breakout list. So one should be on watch out for most of them.
Okay. You know, just looking at the kind of commentary that you had from the ITC AGM as well, while they continue to, strengthen their cigarette business, they're saying they're also committed to developing newer technology pathways. They do see significant headroom for growth when it comes to the hospitality sector. We've, of course, seen the buoyancy across this particular segment, and that new vectors of growth are actually being nurtured as well. Saying that the next strategy for the company, for the FMCG business, has sort of redefined critical pathways to growth and profitability. They're saying that the addressable market for the FMCG portfolio is now estimated to be about 5 trillion rupees, and they are strengthening the structural competitiveness as well. Jonathan, while for businesses like ITC, it continues to be a largely cigarette play, but with now the hotel demerger, with them strengthening the FMCG portfolio as well, do you think even from the current, stock price, there could be significant headroom and maybe, significant gains to be made even from these levels of 447 thereabouts?
Yeah, look, it's an interesting company, and clearly, we have seen some restructuring moves finally happening. I've looked at the company for many, many years, and the FMCG side of the business has always been the sort of darling of the business that will grow one day, become a huge side. Yes, it's clearly a big business. Clearly, it has been accelerating momentum, but it is a very competitive space. You have a lot of very strong both international and domestic competition in that space. So, there is a huge addressable market, and if they get that right, it's potentially very interesting. But clearly, the core business still remains tobacco, and obviously that has some issues for some investors. But yes, it probably, if they carry on the restructuring side, if they carry on doing the right things, then you could argue there's still upside to this stock.
Jonathan, good to have you on the show. We'll let you go on that note. Glad that you could take time out and join in. Let's also take in some closing strategies. Kush, you go first. What are the closing trades you would recommend?
And both of them, incidentally, from the cash side of the market. First is HP Adhesives. Now, this stock has been doing rather well. It's seen a very steady secular kind of an uptrend, almost agnostic of what the market is doing. Likely to continue on the upside for targets of 525 and 540 in the near term. And on this one, 480 is where I would place my stop loss. Something similar is another company called Apar Industries. This stock also has seen a very steady up move ever since Feb, when the breakout came in, and for the most part it's respected its 20-day moving average. So even this has not been largely disturbed by the market moves. Even in the recent downfall, 20-day moving average was the level that it fell to, and then rebounded sharply from there. Recent setup indicates momentum indicator also picking up. Volumes are a little thin, but not too discouraging either. So all in all, Apar Industries 4120 is the first target. 4170 is my 7 target on this. 4020 is where I would place my stop loss for a fresh entry.
Okay, so point taken. Those were the CT ideas coming in from Kush. Nooresh, what about you?
So that would be on Reliance Industries. The stock is crossing a 10-day high. and is setting up for a relative outperformance in the last two sessions after a really long time. Now, if you adjust it for the Geo Finance 200-250 rupees, the previous all-time high for the stock was 2850. So that comes out 2600, 2650 to be a very critical mark. So for now, I expect a test of that 2600, 2650 in the short term. But if it crosses that, that could take a leadership move and actually give a fillip to the index as well. So today could be the first indications of a move on Reliance Industries. So expecting this to take leadership from here on. Add on the way up about 2600.
No, let's slip into a very quick break with news that we haven't seen a meaningful move for the markets. It's been choppy, but in a very narrow band. Right now, though, we're just about defending 19,500 on the Nifty futures. Spot, of course, is much lower than that at 19,466. Quick break. When we come back, map the last half an hour of trade this week.